Now, in West Africa, Ghana's inflation recently slowed to a two-year low of 22.8%. On the other hand, Nigeria's CPI hit a new 28-year high of 34.19% in June. Usoro Essien, who's head of research at RMB Nigeria, joins us now with greater perspective on the inflation trajectories in these two territories. Usoro, good afternoon. Thank you for your time.
Thank you. Thank you for having me.
So let's maybe look at West Africa as a region. I'm wondering, if we are seeing an uptick or maybe high inflation there in the whole region, or if this might be a story that is limited to Ghana and Nigeria at this time.
So the region does have a high inflationary profile, which is what I would call a legacy issue, and that's based on some inefficiencies in the movement of food products in precise due to poor road infrastructure and in some cases the absence of real infrastructures, particularly in a case like Nigeria. That being said, the peaks you're seeing in Nigeria and obviously in Ghana were more or less sparked from, in Nigeria's case, we know the reform that came with the new regime from July 2023, and in Ghana's case, a ripple effect from the default, but also carrying a lot of non-cost reflective pricing in their key commodities, things like cocoa. So it's a mixed basket, but generally the inflationary profile in West Africa is higher than most other parts of Africa, particularly South and North Africa.
Let's focus a little bit on Nigeria here. I'm very keen to find out on, where we are in terms of seeing the reforms moving through the system. Obviously, we knew immediately here, Usoro, that the reforms would have an adverse impact on inflation. But are we seeing that working its way through? Do we have timelines? Do we have models that are telling us when we can expect inflation to moderate there?
Oh, no. So for Nigeria's inflation, again, we expect that the current profile has peaked. That's our estimate, has peaked in July at 34.2. We expected it to touch 34.3 in June. We think that you would start seeing a very mild deceleration in the pace of inflation prints over the next 6 months. For end of year, we expect inflation to taper down to around 29% levels. That does not have any significant spread in terms of the easing impact it would have on consumers and the economy, but versus the high print, it is more or less about four percentage points lower. So we think that based on the reform impact and the impact that, or the current inflationary headwinds that we are facing, we think that we've more or less reached the crescendo, and we will start seeing some of the base recovery. That does not mean that there are no inflationary threats, especially in Nigeria's case. Over the next 3 to 6 months, we still are having an impending wage increase. The minimum wage battle still lingers between the FG and the labor unions, and that will have some impact. It could spur some demand in inflation. A lot of the inflation we've experienced over the last 2 years has been cost push because they just came from basically policy changes on PMS and the FX liberalization.
And then, of course, the Central Bank of Nigeria needs to be responding there. This we've seen in South Africa can cause a double pinch. To have high inflation and high interest rates really is a lot for consumers and business at large. But let's talk about how the bank is responding and if it's adequate at this time and if it could be a little bit more aggressive to get that deceleration going quicker.
So again, sadly, the tools available to monetary policy, as we know, are more prone to affect demand pool inflation, which has to do with the money in circulation and liquidity. So those are their measures. That being said, they've done remarkably well in trying to quell the current cost push inflation, especially from the core side. We've seen successive hikes, and we do think that there is room for one more hike, a token hike. We don't think they will be too aggressive in this last hike because, again, the growth concerns that you mentioned earlier have already started kicking in. There is definitely more pressures on the manufacturing sector in particular. The only sectors that are kind of not as affected because they're able to pass on, obviously, are the financial services sector and in some cases the oil and gas space.
And then let's move over to Ghana now, because of course that's a different picture, like you've pointed out for us. It's more the ripple effects of the default. It's also looking at what's happened with cocoa there. Talk to us about what we're seeing there. We're also seeing, of course, food price inflation ticking up quite a bit there. But what might it look like for that to decelerate? And have we seen a peak there as well?
So yeah, so for Ghana, we do think we've seen, because again, remember last year we had 40% levels, we're already at 23, so the peak has already come and gone. But that being said, over the next, say, 6 months, we expect inflation to be sticky. There is still not a lot of non-cost reflective pricing on commodities. We've seen cocoa adjustment happen. But if you look at the recent data print from the cocoa output, it does suggest that there is still some sabotage because the possibility of getting better prices outside the Ghanaian market, outside the cocoa board, is there. So and for lack of a better word, the Ghanaian economy is more or less faced with a repression because of the default and the strict IMF program gauges. That being said, we expect it to moderate from current levels, 23 levels, to around 19% levels at the end of the year, and it's really base effect driven. There are possibility of further shocks should the currency move a lot faster than it has moved currently. Yeah, we've seen that the currency has steadily depreciated over the last 3 to 4 months, and that is not a surprise because the current strategy is more poised on building reserves to start the recommencement of payments towards the end of this year. So again, the economy is in a hard place because they can't go all out in terms of curbing inflation without also making the business cycle of the economy more cost reflective, so that it does not, there are no subsidies and there are no there are basically no transmission blockages.
And so with that said, also before I let you go, for Ghana, inflationary pressures persist, maybe even more than what we might be seeing in Nigeria?
No. So I think for the upside risk to inflation for both economies still sways slightly stronger to Nigeria because Nigeria has not yet resolved its minimum wage adjustments, which are bound to happen. We are also seeing in Nigeria's case, in our view, non-reflective telco tariffs. So we see room for telco tariffs adjustments also towards the end of the year, possibly end of next year. Plus, Nigeria has also started, the new foreign portfolio access window, seeing a lot of flows, while Ghana is, because of the default, they stopped and they're kind of unbundling. In Nigeria's case, was starting to accumulate. So that again also poses risks towards 2025 in terms of inflation. So I would say that while Ghana's inflation is sticky, it is on the right path towards moderation in the near term between 2024 and 2025.
Also, very interesting insights from you this afternoon. Thank you so much for joining us. Always a pleasure speaking. That was RMB Nigeria's Head of Research, Usoro Essien.